One of the first steps to cope with the mortgage crisis is to assess your current financial situation and budget accordingly. This means you need to take a realistic look at your income, expenses, assets, and debts, and see where you can make some adjustments to ease your financial burden. To assess your income, you need to calculate how much money you have coming in each month from all sources, such as wages, benefits, investments, or other income. If your income has been reduced or eliminated due to the pandemic or other factors, you may want to explore ways to increase it, such as applying for unemployment benefits, seeking a new job or a side hustle, or asking for help from family or friends. To assess your expenses, you need to track how much money you spend each month on all your bills and living costs, such as mortgage/rent, utilities, food, transportation, insurance, medical care, credit cards, and other debts. You may want to use a budgeting app or a spreadsheet to help you organize your expenses and see where your money is going. Once you have a clear picture of your spending habits, you can identify areas where you can cut back or save money, such as reducing discretionary spending, shopping around for better deals, or negotiating lower rates with your service providers. To assess your assets, you need to list all the things you own that have value, such as your home, car, savings accounts, retirement accounts, stocks, bonds, or other investments. You may want to check the current market value of your assets and see how much equity you have in them. Your assets can be a source of emergency funds if you need to sell them or borrow against them. However, you should be careful not to liquidate your assets without considering the tax implications and the potential impact on your future financial goals. To assess your debts, you need to list all the money you owe to others, such as your mortgage lender, car lender, student loan servicer, credit card issuer, or other creditors. You should include the total amount owed, the interest rate, the minimum payment, and the due date for each debt. You should also check your credit report and score to see how your debt affects your creditworthiness and borrowing ability. Your debts can be a source of stress and anxiety if you are struggling to make the payments or facing collection actions. However, there may be options available to help you manage your debt load more effectively. One option is to contact your creditors and ask for hardship assistance. Many creditors are willing to work with borrowers who are facing financial difficulties due to the pandemic or other reasons. They may offer temporary relief options such as forbearance, pausing payments, deferment, delaying payments, modification, changing the terms of the loan, refinancing, getting a new loan with better terms, or settlement, paying less than what you owe. You should contact your creditors as soon as possible and explain your situation honestly and politely. You should also ask for any relief options in writing and keep a record of all communications. Another option is to seek help from government programs that can help you with your mortgage. There are many types of programs available at the federal and state level that can help make your existing mortgage more affordable. For example, the Home Affordable Modification Program, HAMP, can lower your monthly mortgage payment by reducing your interest rate or extending your loan term. The Home Affordable Refinance Program, HARP, can help you refinance your mortgage if you owe more than what your home is worth. The Principal Reduction Alternative, PRA, can reduce the amount you owe on your mortgage if your home is underwater. The Home Affordable Foreclosure Alternatives, HAFA, program can help you avoid foreclosure by allowing you to sell your home for less than what you owe, short sale, or transfer the ownership of your home to the lender, deed in lieu of foreclosure. The Hardest Hit Fund, HHF, provides assistance to homeowners in states that were most affected by the housing crisis and economic downturn. The FHA HAMP program can help homeowners who have an FHA-insured mortgage modify their loan terms. The VA HAMP program can help homeowners who have a VA-guaranteed mortgage modify their loan terms. The USDA HAMP program can help homeowners who have a USDA-backed mortgage modify their loan terms. To find out if you qualify for any of these programs, you should visit the Making Home Affordable website or call 888-995-HOPE-4673. You should also check with your state housing agency or local housing counselor for more information about state-specific programs. If none of these options work for you or if you are still overwhelmed by financial stress, you may want to consider seeking professional help from a reputable credit counselor or financial planner. They can help you create a realistic budget plan that suits your needs and goals. They can also help you negotiate with your creditors or enroll in a debt management plan that can lower your interest rates and consolidate your payments into one monthly amount. However, be careful not to fall for scams that promise quick fixes or charge high fees for their services. You should always do some research before hiring anyone and check their credentials and reviews. Remember that coping with the mortgage crisis is not easy, but it is possible. By assessing your current financial situation and budgeting accordingly, you can take control of your finances and reduce your stress levels. You can also seek help from various sources that can offer relief options or guidance. The most important thing is not to give up hope and keep working towards a brighter future. If you are struggling to pay your mortgage due to a financial hardship caused by the pandemic, you may be able to get some relief from your lender. In this section, we will explain how to negotiate with your lender for a loan modification or forbearance. A loan modification is a permanent change to the terms of your mortgage, such as lowering your interest rate, extending your loan term, or reducing your principal balance. A loan modification can help you lower your monthly payments and avoid foreclosure. A forbearance is a temporary pause or reduction of your mortgage payments for a limited time while you recover from your hardship. A forbearance can help you avoid late fees, penalties, and negative credit reporting. However, a forbearance does not forgive your missed payments. You will have to repay them later, either in a lump sum, over time, or by adding them to the end of your loan. To negotiate with your lender for a loan modification or forbearance, you need to contact them as soon as possible and explain your situation. You will also need to provide proof of your income, expenses, and hardship. Your lender will review your request and determine if you qualify for any relief options. If you have a federally backed mortgage, which includes HUD/FHA, VA, USDA, Fannie Mae, and Freddie Mac loans, you have a right to request a COVID hardship forbearance for up to 18 months if you are affected by the pandemic. You do not need to submit additional documentation to qualify. You can simply tell your servicer that you have a pandemic-related financial hardship. If you do not have a federally backed mortgage, you may still be able to get a forbearance or a loan modification from your lender. However, the terms and eligibility may vary depending on your lender's policies and programs. You should ask your lender what options they offer and what requirements they have. When you negotiate with your lender, you should be honest about your situation and realistic about what you can afford. You should also be prepared to make some changes to your budget and spending habits to show that you are committed to repaying your mortgage. You should keep copies of all the documents and communications related to your request and follow up with your lender regularly until you get a written agreement. A loan modification or forbearance can help you stay in your home and avoid foreclosure. However, they are not free solutions. They may have some costs and consequences that you should consider before agreeing to them. For example, a loan modification may increase the total amount of interest you pay over the life of your loan. A forbearance may lower your credit score or make it harder to refinance or sell your home in the future. Therefore, before you negotiate with your lender, you should explore other alternatives that may be available to you, such as refinancing, selling your home, or getting assistance from a housing counselor or a government program. You should also compare the benefits and drawbacks of each option and choose the one that best suits your needs and goals.